The Dukascopy TV team once again brings you the week ahead, where we invite a guest to talk to us about several key data releases or events that could shake the markets during the week beginning Monday the 23rd of July. Today is the last day of this trading week and I'm talking to Commerzbank Senior FX Strategist Antje Praefcke about the Eurozone PMIs on Tuesday, the German IFO and Reserve Bank of New Zealand rate decision on Wednesday and the US GDP Price Index on Friday. Antje, thanks for joining me. Early next week we've got the Eurozone PMIs. We're expecting further signs of a recession in Europe from these releases, aren't we?
The PMIs in the Eurozone have been quite disappointing over the last month, pointing towards slowing growth and even a recession in the Eurozone. We think that Tuesday's PMIs won't give any relief from that view that we still have an economic problem in the Eurozone. We may see some, let's say, stalling of the PMIs below 50 and no real more collapsing of the PMIs, but however, they will remain below the 50 level, which means contraction. So overall, the situation in the Eurozone in July, what is indicated by the PMIs, hasn't improved and will take some time to improve. So overall, we still have economic problems in the Eurozone.
Now that focus on Europe spills over to Wednesday with the German IFO. This comes after disappointing news on the German economy, doesn't it, with the previous ZEW report?
Exactly. Now we have seen that ZEW index last week, at the beginning of this week, which was quite disappointing, and the IFO index is likely to continue to decline as well because sentiment in Germany is still quite good. Don't misunderstand me, but still it's been coming off and coming lower over the last couple of weeks and months. So this as well, like with the PMIs, is unlikely to help the euro. On the contrary, I think these indicators, these economic indicators, will continue to weigh on the euro at the beginning of next week.
Now we've seen some sort of a concerted effort by central banks to come together with recent borrowing cost cutting by the likes of China, the ECB and of course Brazil. Are you going to be interested in the rate decision from the Reserve Bank of New Zealand on Wednesday?
I think so, because as I just mentioned, we had a couple of interest rate decisions over the last couple of days from other central banks. However, in my opinion, the market is misled in case it thinks that the New Zealand central bank is going to cut rates. It has stated several times that it's quite expansionary, that it has a stimulative monetary policy, and that over the medium term it expects from the reconstruction efforts after the sharp earthquakes we saw 1.5 years ago, an increase in inflation. So it has made clear over the last couple of months that the next rate step will be up, and it's going to stick to its stance. Sure, the possibility is always there that it's going to continue even further its rate pause, which has lasted now for more than a year. But however, to think from that it's going to turn dovish and to cut rates, I think is not the good way to see it. So I expect the New Zealand central bank to keep rates on hold and to keep its, at least in the medium term, hawkish bias.
And finally, we've got another update on the US economy at the end of the week, with QE3 possibly around the corner. What will you be expecting from this release?
Oh yes, we definitely will keep a close eye on this number. Surely the even more important number will be the week after the unemployment report, because the Fed is still concerned about the high unemployment rates, and this is something that's going to probably trigger QE3 or not, so more quantitative easing in the US or not. However, we're going to see second quarter GDP release next Friday, and we'll have to watch this, because in case we see lower growth combined with a high unemployment rate, then the chances of quantitative easing 3 in the US will increase, and that may, at least on a temporary basis, weigh on the US dollar. So on the whole, I think next week we still have reasons to sell the euro and to see a lower euro, but GDP data at the end of the week are likely to limit these losses of the euro, because it's still this theme, quantitative easing 3 or not in the US, in the market, and that's why we are watching towards the end of the week the GDP numbers quite closely.
Well, that's all we've got time for on the week ahead this week. I'll be back later for the movers and shakers of the last trading day. Until then though, goodbye.